Hey, it's your boy Kofi here, and I am super excited, guys. We actually have something pretty big starting right now, and that is my new introduction of Finance Fridays because I realize that I've been doing you guys a disservice by not spreading the knowledge, wisdom, and all the great things that I feel like you guys would truly benefit from. So, this is again start of a new series, Finance Friday, and today, I just want to kick things off, get things started off with some, new concepts. Maybe some of them may be old concepts, maybe refreshers, but to really just start the path for you guys of increasing your own financial literacy. And where this all starts with is you. And not just the you see, that beautiful person, but the you that's inside you. I mean, your brain. What am I talking about right now? Mindset. I know it's extremely important. Mindset is so critical if you're ever going to continue to move forward on your path, especially financially. That's where it really all starts. And I found that this can be a little bit difficult sometimes. And I had to overcome a lot of different things in the last decade with my own financial trauma experiences that I had growing up. So oftentimes it could be a little rough getting it started, right? But you got to start somewhere. So one of the biggest things you can do for your mindset when it comes to financial literacy is learning more, guys. It is so important. When you're able to learn more, when you're able to have, more experience in a certain area, just naturally, your mindset is going to change in that area because you have more knowledge and you're able to draw from more things and not make assumptions or just take advice or base your choices off of someone else's shared experience. And that is so important. So I highly encourage you guys to, there's a lot of books out there. You have Millionaire Next Door, you have Rich Dad Poor Dad, you have The Mindset of a Millionaire. There's so many beginner personal financial books out there that you can check out and really start increasing this area. And do it. You should. Because the reality is you can't operate in the world without money. And if you don't have the basic knowledge, basic tools, you're really just going to be operating very inefficiently. And whether or not you agree that, whatever your stance is on money, it is something that you're going to have to continue to work and make, or you're going to have to manage at some point and do all the things with. So it suits you better to be at least a bit educated about it at the end of the day. So start with the book, start there. It's extremely important. In addition to just dropping those couple things, I also want to go through some financial basics for you guys because, again, we're going to kick this off. We're going to get started. I want to be adding some amazing notes and things throughout our time together that you guys can learn from. So we're going to go through 5 basics today. I got these written down because I tend to talk a lot, so I want to make sure I'm staying on track for you. So the first basic that absolutely every single one of you should know is income and expenses. I know, right? We're getting pretty high level right now. So income, that is any money that you're just taking in, any money that's coming from your job. You could have a W-2 job. You could be that's just working the 9 to 5. You could be a contractor getting 1099 pay. You could be getting tips as a waiter or waitress. You could even be getting an allowance. All those things that are coming in, those are going to be income. So essentially, you can think of it as all right, if your bank account balance was $20,000 at the beginning of the month, and then at the end of the month it's $30,000. You had $10,000 of income come in at some point to essentially increase your balance in your bank account. The next piece is going to be expenses. So expenses are another extremely important part because, of course, income is important, but if we're not paying attention to our expenses, our income can quickly get eaten up, and that's usually, what's called lifestyle inflation, right? If we're not paying attention to what's going out, we're really not operating that efficiently. So you may have $10,000 of income coming in every single month, But then on the back end, you may have like $5,000 or $6,000 of income or expenses getting paid out. So then at the end of the month, you should have essentially, say you have $6,000 of expenses, $4,000 left. Now, if you have $10,000 coming in, and this I do this all the time, and like we go through your budget and all those things like that, and you have like $50 left at the end of the month, doesn't mean your expenses are $6,000. It means your expenses are closer to like that full $10,000. And so one of the reasons it's so important to be aware of this is because, again, like if you are not like being conscious and intentional about what you're spending, you can quickly eat up all the money that you're taking in. So the second basic financial term you should absolutely be aware of is net worth. Net worth is so much more important than income. It truly is. Net worth is your assets minus your liabilities. So let's say that you have a house that's worth $100,000, you have $50,000 in a bank account, and you have another $100,000 in investable securities. You're gonna have $250,000 of assets. Now let's say on top of that, you still have a $50,000 mortgage, and you have $50,000 of consumer debt, and you have a $50,000 car loan. That's going to be $150,000 of liabilities. Now you're going to take that number, that $250K of assets, and that $150K of liabilities, and you're going to say, hey, I'm going to subtract these liabilities from these assets, and you're going to arrive at $100K. Now that number right there is going to be your overall net worth. The reason why this number is so important for so many different reasons, but like the biggest thing is that like your net worth eventually is what's going to allow you to retire at some point. Like you need to have a positive net worth. Like if you ever actually want to get to the point where you can like, you know, not have to work like every single day. And so paying attention and being cognizant of like the liabilities that you accumulate in addition to the assets is such an important piece. And like if you're going through life, you know, over years and decades, and like you're staying at like the same net worth, like you're really not moving anywhere financially. So, you know, at times you will go through dips, you will go through, you know, increases, but like you want to make sure your net worth is continuously tracking over time up, so that way you can retire at some point. The next basic financial concept I'm going to go over today is going to be ROI, or better known as return on investment. This is another, you know, pretty important piece to understand. So for you guys that are, you know, going out there and maybe investing, maybe putting your money into a savings account, doing all those things, you always want to be cognizant of what the ROI is. So let's say, for example, you put your money into a savings account and it has 2% APY per year. And at the end of the year, you also receive a bonus of 0.5%. So if you have $10,000 in there, at the end of the year, you're gonna have $10,250. Essentially meaning that over that course of the year, your ROI was 2.5%. Now, of course, as you keep that money in there, it may continue to grow over time, but you can understand and know that, hey, like each year you should get 2.5% on the money that is currently in that savings account. Now, that is extremely important to know as you're like looking at different types of assets, for example, to start, or to different investments to make, because you want to be able to compare one ROI to another ROI. Now, there's a lot of different things within there. You want to understand the risk, your time horizon, a lot of stuff, but just really understand that basic piece about like, what is your return on investment? That's really the basics of like starting to get to the point where you know that your money's working for you, because you want, of course, your money to have a bigger ROI than like, you know, just zero. You want to be beating inflation ideally. So the fourth concept I'm gonna talk about is called passive income. Now this is like a hot topic. This is like a hottie toddy. Like everyone's been talking about passive income. If you haven't heard it in the last couple of years, you may have been under a rock. because it's a lot of people talk about it. But if you haven't heard about it, I'm going to explain it to you right now. So passive income. Passive income is essentially like how it's referred to in many ways is it's income that you're not directly working for. So like you're not going in and clocking into a job to to gain passive income. Now I'm going to talk about like the more commonly form of like passive income that's talked about, and I just wanted to premise that because like if you talk to like an accountant or a tax professional, they will describe passive income a little bit differently because there's like passive income, there's portfolio income, and then there's active income. Not going to get super complicated for you guys today. Hopefully that didn't confuse you more, but I'm going to go back to the like more commonly defined way of passive income. So passive income is just money that you're not working for, essentially. So that could be like, again, you could put your money into like an investment, for example, and that investment may earn a 6% return on investment. And you're not actually doing anything. You're not actually working to get that 6%. It's just your money is just sitting there working for you. So that's essentially like passive income. So like your money can work for you by putting your money into the right assets that will generate a return for you at the end of the day. So passive income is really important to understand, and one of the reasons it's extremely important to understand is because of this next concept that I'll talk about. Like it's extremely important to attain passive income if you ever want to reach this next piece, which is financial independence. So financial independence is getting to the point where you are independent. Like you are not dependent on any other things. Like you're not dependent on your job. You're not dependent on like a spouse. You're not dependent on like something else in life outside of your own personal assets. So financial independence is like, a goal that I believe that every single one of you guys should strive for. Like getting to the point where you're financially independent is essentially like when your passive income is generating enough, money or capital passively to completely replace your job or completely replace the income that you need from your job. So let's say that, we go back to this example of, having your money invested. So let's say that your expenses are about $5,000 per year. So in today's dollars, when this video is made, you're going to need approximately around like a little bit over like $1 million in order to like generate, $5,000 a year. And I'm also like including things like Social Security, all the different pieces as well there too. But like if you want to retire by today's standards at about $5,000 a month, you're gonna need like a little bit more than $1 million in order to do that. So you are hopefully a very responsible person. You've made sure that your expenses are lower than your income, and you've saved over time and built your net worth up to over $1 million. And now you're getting an ROI on that money, maybe 6% or so per year, nothing too crazy, 5-6%, and you're taking passive income from there. So your passive income is now generating $5,000 of income for you, so you don't have to continue to work. Now, how great does that sound? You don't have to get up every single day and worry about having to go to your job and, smile at your boss that you don't really like, and then go back into, your workspace and act like you're doing your thing for 8 hours and then, go home and stress relieve yourself. You could actually live your life and be like, just like out there doing stuff. How great does that sound? So in order to do that though, you gotta, really make sure that you're building the right habits. You're, being fiscally responsible. You're building up your assets so you can create passive income to reach financial independence. So again, these things I feel like are so, necessary and important. Hopefully this was helpful for you guys to start understanding the basics of finances. And over time, we're going to start diving into more and more complicated, more and more nuanced, really cool things. Oh my gosh, there's so much out there. So stay tuned for next week's episode of Finance Fridays with Kofi.